So there's this really weird puzzle happening in the market right now that honestly doesn't make a whole lot of sense on the surface. You've got MicroStrategy, the company that's famously all in on Bitcoin, and its stock is tanking, while Bitcoin itself is kind of just flat. So what gives? Let's dig in and figure this out.
Okay, just look at the numbers for the last month. Bitcoin is up about 1%. I mean, it's not setting the world on fire, but hey, it's green. At the exact same time, MicroStrategy stock has just fallen off a cliff, down over 17%. This just shouldn't happen, right? How can a company that's basically become a proxy for Bitcoin underperform it this badly?
And that really is the million-dollar question, isn't it? We're talking about a company sitting on a mountain of Bitcoin, nearly 630,000 of them. It's a massive hoard. So why is the stock getting hammered? Well, the answer isn't just one simple thing, and it kind of forces us to reconsider what MicroStrategy is, really, because it's probably not what you think.
All right, so to crack this case, we've got to start with one key idea. It's called the premium. And you can think of it as the first major clue that starts to explain this whole strange disconnect.
But before we can even talk about the premium, we need to know what MNAV is. It sounds complicated, but trust me, it's not. MNAV, that's MicroStrategy Net Asset Value, is simply the total dollar value of all the Bitcoin the company owns. That's it. It's the price tag on their giant Bitcoin treasure chest.
And this is where things get a little wild. The stock market says the entire company is worth $118 billion, but the actual Bitcoin they hold is worth only $74 billion. You see that huge gap between the two? That difference? That's the premium we're talking about.
To put a number on it, MSTR is trading at a 1.59 times premium. Now, in plain English, that just means for every $1 of actual Bitcoin the company owns, investors are willing to pay $1.59 on the stock market. Yeah, you're paying almost a 60% markup for something more than just the coins.
And here is the real kicker. That premium, it's not static. It breathes. It gets bigger when people are feeling hyped up, and it shrinks when they get scared. So, think about it. If you buy in when that premium is way up, and then it comes back down to earth, you can actually lose money, even if the price of Bitcoin itself is going up. This is a massive, massive piece of the puzzle.
In all this volatility with the premium, it leads us to this big aha moment. If you're looking at MicroStrategy and expecting it to be a perfect mirror of Bitcoin's daily price, you are thinking about this company all wrong. That's just not what they're trying to be.
You have to see MSTR as a completely different tool in the toolbox. It's not like one of those 2x daily leveraged ETFs. You know, those things are like scalpels. They're built for super short-term, day-to-day moves. MicroStrategy, on the other hand, is engineered to be a sledgehammer. It's a long-term vehicle designed to amplify Bitcoin's returns over many years, not many hours.
And this quote from analyst Joe Burnett just nails it. He calls MSTR an intelligently leveraged long-duration Bitcoin position. I know, it's a mouthful, but that phrase perfectly captures the company's real identity. So let's break down what those words actually mean.
So here's the game plan in a nutshell. First, MicroStrategy takes on long-term debt at a low interest rate. Then they use that borrowed money to go out and buy more Bitcoin. The whole play is to match a long-term liability, the debt, with what they believe is an incredible long-term asset, Bitcoin. The bet is simple. Bitcoin's growth will absolutely dwarf the cost of that debt, which will supercharge returns for shareholders over the long haul.
So, if the whole strategy is designed for the long term, what happens when we actually stop looking at it day by day and zoom out? Well, this is where that confusing short-term puzzle starts to make a whole lot of long-term sense.
And boom, when you zoom the chart out to 2020 when this whole strategy really began, the picture flips entirely. Forget the last month. Over the last few years, MicroStrategy hasn't just beaten Bitcoin, it has absolutely crushed it. The leverage strategy, when you give it time to work, has done exactly what it was designed to do. So you see, these disconnects we see from day to day or month to month, they aren't a flaw in the strategy. They're a part of it. The pain from a shrinking premium is the short-term price you have to pay for the potential of long-term amplified returns. It's just part of the deal.
Now, understanding all this helps us solve the MicroStrategy puzzle, sure, but it also helps you think more clearly about your own investment approach to the Bitcoin world, because not all Bitcoin exposure is created equal, not by a long shot.
You can pretty much think of it in three main tiers. Tier 1, owning Bitcoin directly. That's the foundational asset. It's like owning the physical gold bars. Tier 2, you can own Bitcoin-related companies, like the miners. This is sort of like owning the gold producer companies. And then there's Tier 3, a leveraged position like MSTR
which is a high-octane, high-risk, high-reward bet. And each of these strategies requires a totally different mindset. As you move up from direct Bitcoin to the companies, and finally to a leveraged play like MicroStrategy, everything gets dialed up: the risk, the potential reward, and especially the required time horizon. MSTR is way out on the far end of that spectrum. Very high risk for very high potential reward, but only if your time horizon is measured in decades, not months.
So ultimately, the confusion around MicroStrategy isn't really about MicroStrategy at all. It's more like a mirror that forces each of us to ask a simple question about our own strategy. Is your investment thesis measured in days, or is it measured in decades? The answer tells you everything.